Right, Gerardo. I can't see everybody that's in here because my access is messed up. You can see my screen though, right? All right, Viv, Melody. I think once it makes that move right there and it just did bullish, like it just went bullish over that candle. If it fails from here, I probably don't want to be in it. It's basically showing that it could clear this candle, but then instantly, like a surge of selling pressure pushes it and turns it inside out. I wouldn't want to be in that. All right, let's get all the toys out here. What is this gold one for? What's a trend line? Duh. Okay, let me adjust one thing to see if they've ChatGPT fixed this or not. If not, I'll drop kick it in its face. ChatGPT is stupid. All right, I'm gonna send him price action. Properties. I went flat on that. The YM finally. And so you see this green line here. You know, like I said, I had my stops pretty much close to where those were. And you see when price crosses over that green line, you see what happens, right? It dumps to the red line. So that's why I said you most likely, if it cracks this green line, you probably don't want to be in it because it's probably going to come down deeper than you want, right? And then if it cracks that, guess where it's going? It's coming down here. But I mean, either way, that's like hundreds of dollars right there, you know, like that you're just letting go in order to try to stay in something. That's crazy. So I always I find that green line and then I look for the pullback that, you know, deepest into it in recent price action, you know? And so then I'm looking at that guy there. And so I'm like underneath it like that. Does that make sense? You guys follow me on that? The green line right here. Whenever I call stops, I'm usually looking at the green line and then looking for the pullback that, that manipulates or tests it last. And so I'm usually getting my target, or like my stop there, because what happens is that if it breaks this green line, it's most likely coming down to the, to this red area. Now I can manipulate the green line and pull back up, and so that's why I look for this last pullback right here, past the green line. And so then that gives us a fighting chance. And so it did try right here, but it failed, right? And so then it dumped in us. That's why I always say, like, if it pulls past this area, it's most likely going to go deeper than you want. And so you look at it, it was a double move to the downside, and it's going to go to the red right here. That's hundreds of dollars you lost right there just trying to stay in on a trade. So that's why I always try to find that area to try to save as much as we can and still give us a chance to get out, or to still make profits. So it's like the balance between the two, if that makes sense. There. Let me update this. Am I going here? Ugh. ChatGPT so stupid. What are these names? My goodness. 10 times to get this to do it right. All right. Not much. You didn't miss anything. I'm getting ready to get started. Me cussing at ChatGPT for being stupid. Oh, right. So I know we don't trade channels, but if you use channels, first thing you should know is how you should draw a channel line. A lot of people like to draw a channel line based on like where all the endpoints meet, I guess almost perfectly. And so like what they say is like, and I'll see all these videos where people are like, you want to get the most points, that you can, where there's the most candles touching or ending, with the wicks ending, on that trend line. And that's wrong. And I'll tell you why. And maybe it's for different trend lines for different things. Maybe they're right somewhere. But me personally, like if I'm putting a trend line here, let me get a chart that's blown up here. I'm going to use the ES because it's got bigger moves. But like, let's see. If I want to see, I guess it would matter if you want to see when price is going to go back up to the top of the trend or if it's going to come down to the bottom of the trend, you know, or you're just looking to see if it's going to break out of the trend, right? Which I think actually, no, it's still the same, because if you don't have it where it's manipulating it, then you're not seeing when it's going to break out of it. And so, so let's see. Let me find a, these moves are like boo-boo. It's so choppy. Look at this. I mean, I guess it really doesn't matter. I just gotta draw a trend line, right? Not in love with this price action either. And they should be parallel, obviously. So whatever point you pick, it has to be, you know, equal to it. See, I don't mind it if they're all on a straight edge going up, and that's, I mean, they're obviously very even and everything. Obviously, you can't show the manipulation on it, but you should draw it to where it's very flush to that. But at some point, there should be manipulation to it. And so you can see right here, there's manipulation, right? And so this is holding that, you know, pretty much holding this edge going up right here. It manipulates it right there, but it doesn't manipulate it there. And it doesn't manipulate it there, but it does manipulate it here. And then once it manipulates it here, I'm expecting it to manipulate it over here, right? So now what happened when this manipulated this here is that it continued to ride it up there, which that doesn't really matter, but it came back to the other side and hit the other side. And so, and I give it like a tick or two or whatever variance there, because I could be off on human error, right? So I don't really worry about something that tight. But what I'm expecting though is when it manipulates the high, is that it should be manipulating the low. If it doesn't manipulate the low, then it needs to manipulate the high. Okay, and if it doesn't manipulate the high, then it needs to come back and manipulate the low, right? Because if it doesn't give it one way, it's going to give it back the other way. And so basically what it's saying is, and so you got to think about the trend line here too. It's aggressive, right? It's going up at an angle, which means that every time the candle goes up, it has to break for a new high in order to hit the trend line. And so at some point that's going to get exhausting and it's not going to be able to do it anymore. And that's the point of a trend line, is to show when the exhaustion is happening. And so when I have this move, I'm going to move this over so it stops pulling me. When I have a break here, I'm expecting a breakdown here in order for it to break back up here. When I don't get the break here and I don't get the break here, because I didn't get it here, I'm going to get it double over here. But if I don't get it on both sides, then, you know, I'm expecting a bigger move one way or the other. And then I get this little break here, which wasn't really a bigger move, but I did get a break. And so now I'm thinking, okay, well, because I got a break here, I need to get a break up here, because it manipulated here in order for it to be able to reach this up here, because it didn't break over here. And so that was the purpose of this manipulation, is because it didn't break here and it was supposed to break here. So it did it here to make up for both of those. And then now that I've done it here, I owe it back over here. I didn't get it over here, and that's your sign. Like that's your tip right there. It's like, okay, I broke here. I should have gotten a touch here because I've gotten a touch every other time. Does that make sense? Someone tell me that makes sense. Someone tell me that that's a, okay. All right, so like think of it like this. It's like a tit for tat, right? And this is tit, this is tat. Okay? So I'm giving one here, I'm getting one here, right? Forget about the manipulation there. Don't worry about that. I'm touching the top here, I'm touching the bottom here. So I'm 1 for 1, so we're even. I'm touching the top here, I'm touching the bottom here, right? I'm 1 for 1. Okay, now I manipulate the bottom here. Now I owe 1 over here. I'm -1 over here. I need 1, right? And so when I come up and I don't give 1 to over here, that's a fail. Because every other time, look at it, every other time I got 1. Do you see what I'm saying? Or you can look at this, like a tit for tat there, okay? So I touched it there. Now I manipulate it. Well, I should manipulate it over here then too. You know what I mean? Like touching and manipulating are 2 different things, all right? Touching is like a confirmation, right? It's like you're doing the bare minimum to get a green light to go back the other way. All right, so I touched it up here. I got a green light to come down to the bottom. Boom, to test it. I get a green light here to go back up to the top. Boom, I got a green light here to go back to the bottom. Got a green line here to go back to the top. I didn't go back to the top. Because I didn't go back to the top, if I don't touch the top, then I've got to come down, and so there's another trend line that you don't see. Yeah, there's another trend line that you don't see that's like it's a trend line that runs parallel to this, and it's for like when it fails to touch the top line, and it basically comes back and hits this line. For the first time it doesn't touch, so this is the first time it failed to touch the top there after touching the bottom, and so then it has to come back deeper than what it would, and so where it should go is the trend line. And this is going to get confusing, and I'm sorry, I'm trying to think of your absolute like minimum level of acceptance for a green light is hitting the bottom trend line and then hitting the top trend line. But if you don't hit the top trend line, then you owe another one to it, which means that you have to come deeper than you did before. And so this is where it gets really odd, because deeper on an upward angle is really, it's either flat or slightly still higher than the other one. And that's what an uptrend is it's geared towards a bullish, it's in the bull's favor. So a pullback, because you failed to hit a high here, the trend line, is still higher than the last touch, right? Sometimes it's even, but I mean in this case it's still higher than the last touch. But in its own, excuse me, fucked up way, because this is how they look balanced to the sec, right? Well, it failed to go up here, so we pulled back deeper than we would have before. And pulling back deeper just happens to be higher than where it was because it's an up angle. And so, I mean, in a weird way, that makes sense, because, you know, if you're in an up angle, then you're not, a pullback is still bullish, right? And so this would still be a bullish pullback. Does that make sense? I'll get there. Just let me get because you can tell when it's going to fail. You know what I mean? Like you can tell when it needs to come back and come deeper, right? And so this is a very minimalist look at this, right? Like you're talking like a couple ticks here, but in reality, it's if this fails here, you know, you could short this, because on a bigger move, this would be like a couple, you know, make a couple points, you know, like at least first targets off, and you know, and more, on a regular move. I'm looking at a very tight channel right here because it's easy to like show you, and I'll show you on a bigger one here in a second. But so And don't let this confuse you. If it confuses you, just cut me out, tune me out, and go on with your day. Uh, because we don't trade trend lines, right? But there is a trend line rule set. And so if you know the rule set, then you know that if you see a red candle with a wick going up, that it failed and it turned inside out, and that is a true sign of rejection, right? Like it attempted to go up here. We know that if it touched the bottom one, that it wants to touch the top one next. And so this is showing you that it failed, which means that we are coming down to this other trend line that's underneath it, that's running parallel to this for our failed touch to basically what's it called, grab liquidity to go up to try to hit it again, right? And so when we go up and we fail to hit it again, so that's the second fail. So this is first fail and we pull back. The second fail has to go deeper than that, than this one here. And again, we're going up at an angle, so really deeper than that is actually just even. All right, is this starting to kind of make sense here? Like your liquidity grab on your first fail is small. So when you see that fail, what does it tell you? I'll get there. I'm just trying to get the rule set out of the way here. So if I touch the top line, I got to touch the bottom line. If I don't touch the bottom line, then I got to pull back a little bit on the first time I fail. If I fail to touch it again, the top line, then I got to pull back deeper, which ends up almost being equal basically to the first, this candle here, the last time I touched. And that's called a liquidity grab, and that's to give us momentum to go back up and hit it again. So then once I've pulled back and I start to go up and I fail to get back to the trend line, period, then I start to go sideways basically, and eventually I fail. So I'll do this. I pull back to the top of this move right here, and then I try to break out again to find support on top of this. And then if I fail to get back again for the second time to the bottom line, so the first time you fail to hit the bottom line, which is the same as the top, you pull back again to to this area a little bit. In comparison to this pullback here, you just pull back a little bit. But then when you fail to hit the bottom line again, then you pull back a lot. And so this is where your move is when you're looking at the trend lines and you're seeing that it doesn't touch here, you know the pullback is going to be bigger because it already missed it once here. You saw that it manipulated here, and we didn't get manipulation over here, so we already have, so you have a short here, right? And so this is the NQ. And I'll go to something more recognizable, but that's 27 ticks on the NQ. That's huge. All right, and so then after we did this pullback here, we try to get back to inside the channel, and if we fail to get back to the bottom line here, we pull back again a little bit, right? And that's probably like 15 ticks. And then if we fail after that to get back to the bottom trend line again, then it's going to be a much deeper pullback, and so it's going to be probably equal or double this guy right here, and so you're looking at, let's see where it ends though. Look at this, double right there, 70. So you heard me say it, equal to this or double, because it'll do another test right here. If it fails, it dumps again, and then it'll start to bounce and try to basically create a new trend line basically after that. And if it can't hold it, it does the exact same thing all over again. So look, let's say this is our trend line. Well, I failed here. I pulled back. I failed to go back. I pulled back again. I failed to go up. I doubled down. And so maybe this is your fail there, then this is your second fail. So you pulled back, and the goal is that if you hit the bottom one, like you just pull back to this area here. But if you miss if you miss the bottom one, it's deeper. Right? So you miss the top one, you just do a regular pullback. You miss getting back to the line altogether, you do a deeper one. You miss getting back to the bottom line altogether again for the second time, it's twice. It's twice as deep. And so your trade is when you see this happening and you see these green bars going up and not getting back to these lines, you know that after the second one, once you're underneath the lines, it's going to be double. So that's the second, probably 40 to 50 tick trade there. Is anybody getting this now? Possibly. What time are you thinking? I mean, it just depends. I mean, I can't live in here. Is this making sense to anybody? Here, I'm gonna go to something more recognizable. Most of you guys trade the YM. I mean, somebody tell me if this is making sense or not. I'll try to explain it in a different way. All right. Yeah, I'm not doing the best job explaining it. I'm just trying to think of how you guys are seeing it. I just don't, you guys aren't giving me much to work off of. Like, ask questions. Give me something to work off of. I need to know what you're grasping and what you're not. Like, what is confusing?
Can you hear me?
Yeah, I hear you.
Okay. So first of all, could you start with where you draw it from?
Yeah.
That would help.
Yeah, I think you could just draw them from anywhere, really, as long as you can see where it's hitting the upper line. But yeah, I'll show you. What else? I mean, I just need to start over from the beginning? Is that what you're saying?
Basically,
Okay, fantastic.
where you draw them from, when do you draw them?
Always.
Why? Okay, always.
So like anytime you see price action oscillating in a tight channel, is that's a all right. So let me define what a tight channel is. I mean, anytime you see price action going up in any direction, really, like like this is fine. Just just pick a point that cuts across the tops that encompasses. Yeah, you just want as many touches as you can get in an angle going up, and that might not be the easiest thing to do. That takes some practice, right? So I use array, and arrays, they're like this, and you just click on the screen, and then you just drag your cursor farther away from like where you started because it's really janky over here. Over here, so if you go farther away, if you push farther away, then you can control exactly where it goes. And so I like to click not at the high, but like back behind the candles, but close to like the high somewhere in this area where I feel like I can see it like a line going across. And a good rule of thumb is if you have swing points on, uh, if you're cutting through like the swing points at the exact same dot on each high, you probably got something. Like you're probably really close to it.
Oh, okay. Okay.
I mean, I'm not exactly, but like I'm on the third one on this one. I'm probably in between the fourth and fifth one on that one, and then I'm between the third and fourth one, probably closer to the fourth one over there. So I'm somewhere in the same ballpark on those, right? Um, give or take a dot. And then across the bottom, you're just doing the same thing. Like you're picking a spot, in somewhere in the wicks towards the ends of them that, like I'm in the middle of this wick, but I'm cutting through the bottom of this candle here as my first gauge, like my lineup. And then I'm dragging it all the way over here. Let me get rid of this. So like I'm not at the end. I'm kind of like right above it because like see this wick stops above this one. So I kind of want to be equal with that. And then I'm lining it up. So I'm dragging my cursor out here, and then I'm moving it up and down away from the lines so I can see where it's mashing up against the lines. And if I can get a point where I'm equally cutting through like the majority of the candles and still hitting like the ends of wicks and bodies on other candles, you know, like it's kind of like somewhat equal,
Okay.
then I'm good. And then I look to make sure that because usually at that point you're parallel to the other line too. If you're somewhat equal, cross-cutting through most of your candles and then hitting wicks and bodies on the other ones there going forward, you're probably pretty close to being parallel to your top line, because that's what you did with the top one too. Does that make sense? And so then if you also look at your swing points here, you know, I'm slightly above that one. I'm a little bit further above on that one, but I'm still slightly above it. I'm like right on top of that one. So I'm within a point, you know, of these pullbacks on these swing points here as well. So there's like a point on either side there, variance. That as long as you're kind of hitting in between all those going across, you should be good. And then again, like your lines just need to be parallel, really. And then you can work with anything from there. And so now, so does everybody get that? Can we get some yeses? You guys figure out how to make that? You guys go ahead and practice right now while I'm talking. If you don't have your ray on a hotkey, go ahead and do yourself a favor. Go to your tools, hit hotkeys. It's on your control panel. And then scroll down till you see ray, which is probably like 4 or 5 pullbacks on the wheel. And it's underneath VWAP. And just click in that space and then just hit a hotkey, like any of the F keys that who cares what it is, because you're not using it anyways. Just click it on something that I use F3. And then just hit apply and hit OK. And then slowly start to incorporate the things, like if you guys are going to start drawing on your charts, slowly start to incorporate these things, these hotkeys, so that way you're not having to like click the pencil, click the thing. I mean, that just takes too long. If you're in the middle of a trade and you're like, you know, you're trying to figure out whether or not this thing's going to fail, you know, because you can use that, you know, you can use trend lines to kind of figure out like when you should be getting out of a trade. What's too narrow for you? The channels? Here's another thing you can do a hotkey on. There's a trend channel, and there's a hotkey for that as well. Trend channel, you draw your first one, you line it up the exact same way, and it leaves a shadow. And so you just click, and there you go. And you don't have to draw 2 lines. It's in the drop down. It's basically
So I see it.
where.
Control 2.
Yeah, so just change it to a hotkey that you'll remember. That's all I say. So yeah, the tight channels are for there's a reason for them. You know what I mean? Like because when you have a tight channel, it's manipulation in order to get to a price point to drop for support. You know, because they want to test an area to see if there's any support there or resistance or support or whatever. And so they carry price action up. And so like if you look at your price action, so I know I'm going on different tangents here, but I mean, I guess this is all filler information that makes all the rest of it make sense. Look at your price action here, right? I mean, is there a clear difference between these two? Can you see that? Do you see a difference between this and this? Okay, so your price action here, guess who's running this price action?
Yeah, all those.
No, retail's running the price action here. This is all retail right here. And you can tell because it's unruly.
Okay, because I thought you said if you see like red, green, red, green, red, green, like it was manipulation.
Now, if it's pure red going down, that's a push down to find like a pocket of buyers. And so it's basically like a liquidity grab. if it's pure green, that's retail. So pure red would be institutional push down or market maker push down to get
Oh,
like a liquidity grab to run it back up because they failed to go up, because they're trying to go up and they failed to break a high. And so that's the quickest path to an area that has buyers to try to hit absorption. And so that's a whole nother conversation, but yeah, I can go on a rant about that. But that's institutional. All greens going up, that's retail because that's FOMO. And so
oh, okay.
if you get a mix of green and red going up, then that's basically institutional pushing down to reignite FOMO, and the greens are the FOMO, you know, catching on every time they. So I guess I need to explain this too then. All right, so let's imagine that I've got 100. Of course, it's a lot more than this, but let's just imagine I have 100 buyers in the market right here, right? And I'm going to turn off my timer here. There. All right, I got 100 buyers or bulls, let's say, right here. I'm sorry, right here. And now, jeez. All right, so now where is my stop loss at if I'm buying, if I bought into this move going up right here?
Oh, if you bought right there.
Yeah, if I'm in this trade going up, where's my stop loss at?
Oh, at the next swing. At the swing.
Right. So right here somewhere, right? Well, I'm in this
Okay.
bullish
I see it.
I'm in this bullish move going up, right? And I'm fizzling out right here. First time, like, this is a push down in order to catapult it up again, right? This was a push down to catapult it up again, but what happened? It failed. It didn't go up again. So right here, it failed, right? Does everybody get that? Does everybody understand that? I don't want to talk too fast.
Oh, okay. I see that. That was a stop hunt. Stop hunt.
Yeah, you're a little bit too far ahead.
Oh.
Right here, we're talking about these bullish pop up, push down right here. That's institutional pushing it down, and it's gonna explain this too. So we'll get there. Um, but understand that this push down is institutional freeing up shares and getting it back into the FOMO of this candle to let it catapult again to get another measurement of this candle. Can everybody agree? Let's just assume that that's correct. Can I get yeses? If you don't understand, say no. Melody. The melody leave.
I'm in a short.
All right. I don't need you to understand the concept of it. I just need you to, let's pretend that this is the reality, okay? How about that? Can you agree that in this pretend world that I have a bullish move up here and it stops here? In order for it to continue to go up, let's assume that, all right, there's X amount of shares that are available to buy, right? And let's assume that in this move here, that we tapped out of shares. There are no more shares to buy. We bought them all. 0 shares in this area. But whatever shares we had left over that were being bought caused this candle to explode upwards. Okay, can you wrap your brain around that? Okay, good. All right, so now it's kind of like if you think of it as like fuel, right? And I don't want to confuse anybody, but by switching up here, but I think this might be a better one to understand. If shares are fuel, right? And I'm in a car and I come down to this area and I tap out all the fuel. I buy up all the fuel that's left in this area. So no fuel left in this area. Because, you know, there's only so many shares. There's only so much fuel. But on that fuel that we got, we drove up the block and we ran out of gas right here at the end of this candle. All right, is everybody with me on that? Well, I happen to have a container of gas in the back of the car, which stinks. And I pour that in the gas cap, and that happened to be this amount right here. Okay? And so that got me from here. Well, I had to push the car back a little bit to the place where I kept the gas, I guess. And so that got me from here to here, and then I ran out of gas again. Everybody with me there?
Yeah.
Chat? Gerarda? Okay, good. All right, so now I don't have another container of gas. The only place I can go is to go to the gas station on the other side of the block from the other one, the opposing gas station. You got the north side one on one side of the corner, and you got the, you got the four corners. You got the gas station there and the one on the other corner, right? And so I gotta go down there because there is no more gas in this area. I can't go further up anymore. So I have to come down this way to get gas in order to keep going back up. And so what does this mean? Like the analogy, like, okay, look, if I run out of gas up here and I have no more shares, I've completely ran out, the only way for me to get more shares is to break stop losses, okay? And so if I'm in this trade, where are my stop losses? They're here, behind the swing point. And so in order for me to get those shares, and now I've got people who are trailing their stops behind these areas as well as it's going up, right? And so I've got enough gas that I can get from breaking these stop losses to get all the way back down here because I got people trailing going up here, but I've got a major supply of fuel down here because all the stop losses are down here, right? And so every time I pull a candle back, I'm breaking stop losses. Now, why is that important? Because it's taking and putting the shares that are all right, so because there are no more shares left in this area on this move going up, I've got a queue of people waiting to buy. All right, and I've got higher time frame buyers who are either in on this or waiting to buy as well, because we just ended a 30-minute candle over here, and so they're in it, they're interested. So they're the ones that probably bought up all the shares. Now, this whole thing right here is designed, if you look at it, I broke the high of this level, I broke the low of this level. Let me erase all this, I'm sorry. I broke the high of this level here. I broke the low of this level here, so I'm breaking stop losses on both those sides, right? I broke the low of this level here and the high. Why is that important? Because I'm triggering, bears who jumped in here. I'm breaking their stop losses every time I pull back, and break these areas. I'm breaking bear stop losses who are trying to go in short here. I'm breaking bull stop losses from here where they entered here. I'm breaking the bulls down here, their stop losses as they're trying to go up here. And so if I'm breaking their stop losses, guess what they're doing? They're revenge trading back in. Bulls are jumping back in here to go up. Bears are jumping back in here to go down. Bulls are jumping in here to go up. Bears are jumping in here to go down. And I'm breaking their stop losses each time. which means that they're going into like this revenge trading frenzy, right? Because now they're probably out like $1,000, $1,600, right? And so I'm like preying on their psychology.
Oh, that's interesting.
Yes,
Yeah.
just like that, Gerardo. And so if I'm preying on their psychology, then I'm getting them to revenge trade. So I know, and here's the thing. Here's how you have to think about it. All right. The people who are in here with their shares under here and under here and under here and under here are diehard, right? Because one, they've already lost money and broken their shares, and so they're revenge trading. I know that they're going to jump back in, so it's a guarantee that I'm going to have their commitment to getting back into buying more shares. And so every time I break their stop loss, as time moves on, I've got higher time frames that are also buying the same shares. And so guess what's happening? The amount of shares that are available to buy are getting less and less because I've got more people buying the shares than I did before. And so if everybody's fighting for the same shares, guess what happens to demand? Demand spikes. Does everybody follow that thought process? More people buying the same shares, the same amount of shares equals higher demand. And if demand is spiking, then nothing stops the price action from going up. Because if demand is spiking with the exact same amount of shares that are being traded, then the price can only go up. It would take twice as many shorts in order for it to go down. And so if I've got people that I know that are locked in on buying the shares because I'm breaking their stop losses and everything, and then I've got higher time frame people coming in and buying the exact same shares because I've dragged this out for a long period of time, then I've got a recipe for success that is going to equal demand spiking and exploding upwards. And so, and that seems like a lot to take, to kind of keep in your head to think about. But just know that if I'm breaking stop losses, it's because I've got guaranteed buyers that are going to jump back in. And so that means that if I had 1,000, uh, bulls in this area buying, then I'm gonna have 1,000 bulls when I come down here and break this major area that I hadn't broke yet of stop losses that are gonna go back in and buy again. And so then if I know I got a guarantee of 1,000 buyers, and then I drag this thing out for over an hour or 30 minutes or 15 minutes, then I'm getting 15-minute, 30-minute, an hour time frame traders coming in and buying the exact same shares. Now I've depleted all the shares and I've still got 1,000 people who want shares who are sitting in the queue waiting to buy shares. Uh, yes and no. I've not really found one that works great. I'll show you. I'll show you in a sec. Put a pin in that and ask me in a second. Um, so I've got 1,000 people waiting that are guaranteed buyers because they're revenge traders. They're in the queue waiting to buy shares, right? And so when this comes down and breaks these stop losses right here, this major point right here, well, guess what happens? I've got 1,000 shares. I got 1,000 people who just had their stop losses broke, that the shares are flooding into the queue to fulfill the other, whatever amount of people that I had waiting in the queue on top of that. So they get filled first. And then these orders go in to buy back, and then it starts to explode upwards because demand is spiking because I have less shares to trade and I've got more people in the queue. I just erased everything. And okay, there you go. And so then I've got twice as many people, basically is what I'm trying to say, is I've got twice as many people buying the same shares than I did earlier, which means that my demand is 2 times greater than it was before, which means that each time a candle goes up, it's moving up with twice as much momentum because the demand is spiking. Does that make sense?
Okay, because now you have the higher time frame people buying,
Yeah, it
jumping in.
Right, but you also have the people who had been getting their revenge trading that are guarantees. And so we're taking people who are like die hard bullish, they're trying to go up, and we're taking advantage of them and breaking their stop losses to cause them the revenge trade to keep buying shares, but then introducing new buyers at the same time as this goes on because they see this, bullish move getting ready to happen, and they're all piling in as well. And so now I've got less shares to trade and more people. And so if they're guaranteed buyers, like these are guaranteed buyers, it's 1,000. That means that every time I do this, I've got people that are holding on to shares that aren't letting go of shares more and more each time. And that's the key, is to have, if I got guaranteed buyers, then I've got what's called strong hands. Strong hands means that they're not letting go of shares until it gets to a profit area, right? And so every time I manipulate an area and break free shares, I'm taking advantage of some strong hand people that are wanting to hold on to shares, breaking their stop losses, causing them to revenge trade, but introducing new buyers that are buying their shares as they're being broken, and then taking the strong hand buyers who are guarantees and putting them in the queue to buy more shares as they free up, which continuously causes this to continue to go up. As long as I can keep the queue full of buyers at all times, then demand continues to spike and then price keeps moving up. Does that make sense?
Yeah.
Melody, did I lose you? I did lose you? Okay. How do I do this? You go away. There. So that's why price moves the way it does, and so that's why it keeps going up here. And so this sideways action here is people taking profits, right? So they call it consolidations. Is people are taking profits in this area because they just finally broke even on all this mess over here, probably, or you know what I mean? And so then they're taking profits, and so this is just churning out the profits, and so this is a healthy thing to see when it goes sideways, and that's why they call it a bull flag. So that's what a bull flag is where people are taking profits in the middle of a big spike up, right? Because they just got broke even over here and they're afraid to lose their profits. And then they end up jumping back in again right here. And so then you see another spike up and then another level held above this area and then another spike up, and it continues to do that because people are taking profits or they're pulling it back into FOMO, which is probably what that is, taking profits, pulling it back into FOMO here, taking profits, pulling it back into FOMO, pulling it back into FOMO, deeper FOMO because it failed, and then now this is just taking profits here to find support. FOMO fail, drops deeper, FOMO. And so that's all it is over and over and over again. And so now if we go back to the trend line conversation, so again, this was different price action than this over here because this is all retail right here going up. And so then retail runs out of steam here and it's just not high enough for them to continue their move. And so then you start to see this kind of like a trend, and this is not as bad. Like when I say hardcore manipulation, it's more like it's wicks on both sides, like that. That tends to be more of what I'm talking about, is that right there. And so then that's where your rules start to come in, because if you're looking for manipulation to the upside, and like on this one right here, it manipulated the upside there, but it missed it here. So it missed it here, came and hit the bottom, and then manipulated there to make up for this guy over here. But because it made up for this guy over here, it ended up causing this to come down and, you know, to manipulate this side here where it hadn't done that over here. And so because it manipulated this, now it gave cause for it to fail to get back into it. And so that's why it started to tumble down here. And so then when you see that, that's your first sign that, okay, like now it's starting to show weakness, because it's incrementally harder every time you get a new candle because the trend line is going up at an angle, right? And so you'll see price chasing after the trend line, and then it fails to get to it, and you'll see a bounce off of it. And then on that bounce off of it, you'll see it fail to get back up even to the high of that last move up. And now you know you get a double move down. Boom, 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 boom. And so this is like easy ways to find trades, is when you see this and then this happen, wait for it to close underneath that wick of that green candle, and boom, you've got a trade. Does that make sense?
Yep.
I don't know what a base is. What is a base?
Talk about what Coach Brian was saying, forming a base.
I don't. So like when you like make a double touch to an area, is that what he's saying? I guess. I don't know. So now look at this. Here's a trend line that I drew from over here, and you see us falling back to a trend line right here. Oof. And look, you see it find support or resistance there. So, you know, and then support here at the bottom, bounces out, makes it above this area. So it's saying I can make it above this area right here. So this is not dumping down because it's failing. It's saying, look, I've got room to go right here. Let me come back and let go of some weak hands. Let me take some, drop off some bears and pick up some new buyers right here. You know, so you buy it right here. You know, it might not be done. It might need to manipulate this one more time, you know, because I mean, it just touched this area. But I'm going to jump in as an example. You know, it's not quite touching the trend line there, but that could just be me my drawing or whatever, whatnot. But on this side, it manipulated it. On this side, it has touched it. That's a progression right there, right? It's telling a story. On this side, we broke past the last swing point. We broke the swing point here. It's saying that, even though it's just wicks, it's saying that I can still go, right? There's room to go up here. So I'm pulling back to my FOMO area, right? Where I exploded out of last time, which is my first big green candle. And now I'm relaunching out of that area. So that's why I entered on this one, because I feel like that's where this FOMO area is, and it's more than likely going to explode upwards here. And so then I just got to get it above the 89. I close above the 89, then you know, hopefully you put a couple candles and then come back and retest it, and then, you know, take off and launch. If it can't close above the 89, then I'm probably coming back down to, again, maybe even manipulate this low if I can't pass the high again. See how it sucked back really quick at the end there? I might have to retest this low, manipulate this low to break those stop losses to get another pocket of, you know, liquidity in order to run it past this area, but I think they got it right here. A lot of times when you see it prod down at the very end, it's to break those stop losses and feed the float, the people that are waiting in queue, to put, and so you got to think of your placement, right? In this area, we're deeper than where we've been over the last 100 and some candles, right? And so because we're deeper than where we've been in the last 100 some candles, who do you think's waiting in the queue to buy shares right here? This will tell you right here, right off the bat. This move right here, where it broke the high of this guy right here, broke that swing point, this is telling you that there's bulls right here in this area. And if I know anything about bulls, they like to follow the trend upwards. And so if I pull back anywhere inside this area, you know, they're probably buying right here, and that's going to be enough to get me up above this area. And so then I'll save this pocket down here as a last resort in case I can't make it back up there. And so I've got this, it's like my secret weapon is I got this guy right here that I can tap into at any time I feel like I can't make it back to the high. And so the goal is always to get back to the blue, which is my, where my indicator is. I want to get back to the blue and put pressure there to see if I can break it to get to gold. I'm using these because it's easy to see. And so I put a wick higher than my last wick there, showing that I can do it, right? And so now I'm going to come down and I'm going to reignite this move. And because I broke that high up there, I don't have to break the low of this candle. I can stay up here in this area and not break this low because with this wick right there, I broke the high of that wick. Yeah, my body didn't close above this guy here. Now this candle didn't break the high of this wick here, and so it just has to break the low of the doji, which it's already done. And so now it's going to break the low of this candle, I guess, right here. Once it breaks the low of that candle, then it's going to try to go back up and try to break this high again. If it fails to go up and break the high again, then it's got to break the low of this guy. Yep. Retap this or manipulate this area. And so that falls into like now let's correlate that back to the channel. All right, I've got my channel drawn here. What do we do? I manipulated the low, I manipulated the high in a big way. I came down, I didn't even hit the bottom there. I tapped the high and manipulated the high. So I should manipulate the low. If I can't make it back to the low, that means I'm extra bullish. Right?
So, question. So I went short at 43.95, right? So I have a channel going down. So I have drawn another channel going up. So right now it's outside of my, I don't know if I do it right.
Where is it at? Where is it at?
Right now it's outside of my trend line, but I have a really tight trend line.
Where are you starting from?
Oh, I went short at 43.95, 403.95. So way back.
Okay, well,
top, yeah.
Up here. Mm-hmm. Is it kind of going like this?
Huh?
Is it kind of going like this?
Yeah. It went through all of that. Went down.
So when it broke your trend line, you probably should have taken profit, or at least taken most of your profit, and then left like one maybe, or.
Yeah.
I probably would have taken it. Me personally, I would have taken it when it broke the like your last turn before it dropped past the swing point. So like, So like if it broke that area right there, I probably would have gotten out because that's basically your 89, right? But you're still in it. So here's what's happening. You've got a downtrend line, right? And you broke the downtrend line to the upside, and it's coming back to find support on top of the trend line. And then once it finds support on top of the trend line, it's bouncing out to go long. If it fails to hold support on top of the trend line, it pushes back in, and then it bounces back to the top and bottom. And then if it's still bearish, it drops back out the bottom. And then it comes back and rechecks it. If it can't get back in, it goes deeper, right? So same thing on top is it comes and checks the support, finds support, it bounces up, it comes back to recheck it, can't get back to it, or goes deeper, and then finds it, then goes up, and then rechecks the support on top of what that high was on that first pullback. Does that make sense? And so that's kind of where you're at right now, is it's finding support and it's trying to break out to go long. But if it fails, so like right here, if it fails to get back to this trend line, then it's got to go deeper, which means it's going to go, probably down to find support on that trend line. There's like another trend line here. There's trend lines everywhere. I mean, they're constant. You don't need to draw all of them. Just kind of need to know, like, if you see like a resistance point above your trend line, that means there's another one somewhere right there. And then it's trying to find support, come back down and go deeper. So you're probably looking at like this area, 35. It's 42.
Having a hard time.
Yeah, so it'll probably come down to 42 then. And so you should I should just do this then. I'll reverse it. And it might be like enough just to break the low of that candle first, retest, but if it can't get past the high of this, then it's going to come down and break that, and then probably fail again, then come down and break and hit this down here. It probably makes it though, honestly, from here. You look at your stochastics, not quite oversold yet, starting to open up. There you go, and now it's going up. And so now it hit that trend line. So it doesn't have to come, like it could be bullish, like it didn't come down and hit it here. So it could be bullish and break out and go long here because you can take, okay, well, what happened to this move here? Like what happened to that energy that would have gone there? Well, it went to go up and hit this up here. And so then when it comes down, it probably shorts that again there, and that probably goes to breaking it out up here. So if you start thinking like in measured moves, like everything's measured, you'll start to see like repetitive movements, So like here, it didn't give it to here. It missed it by a little bit, so that's why we're going down. So now we're giving it here. And we're just now starting to hit that bottom there, and you see it stop exactly right there. Now you start in the next candle there. And so again, it's just fuel, right? If you think of each one as fuel, wherever they cut a move, it's going to the other direction. And if they cut it in that direction too, well then it's going back in the other direction double. And that's a lot to think about. Like it's so like micro, like analyzing everything, you know what I mean? But it's the same thing on a bigger move, like on these waves here, these pushes up and down. Like here, I got this push up here, and then I pulled back into this area. Well, I should be able to get this move back out of that and some because I went deeper into this area, right? Well, here's my move to the upside. I didn't get any of it. So where's it going? It's going to the downside, right? It's giving it back to the downside. And so then now I've got this move here to the downside. I should be able to get that back to the upside, and I got it. And some. And so then I should be getting that back to the downside, which would bring it down here, but I didn't, right? It's stopping here. So if I can't get it back to the downside here, guess where it's going? It's going up here. What would you forget? Oh, indicator that shows when liquidity is or shares are running out. You know, oh, you just change it in the settings and set it as a default. So your shaded area, it's usually translucent or something like that. When you double click it.
Oh, okay.
I mean, I think it's easier to see it when you look at price action like this. Like look at your bounces on your price action. All right, so you get into this area and it's really tight all through here, right? Which means you have very few shares to work off of, and so you're just swapping shares back and forth to keep it, going up. Recycling, basically. They're recycling shares going up here because they're unlimited shares. But then they have this big push down and you get a big push up. And then your price action opens up and it's like these bigger moves. Do you see that, Viv? Viv, do you see that? I think Viv left. Okay, well. When you see these bigger moves get shut down and they start to go really tight like this, it means that there's less people selling because you still have the same amount of fuel, but it's, well, not really, because there's less people. Something happened to the fuel is what it means. Is like, did somebody cut the fuel? Well, where did it go? It didn't disappear. They're just being held. It's being held in reserve. People are holding on to these shares, and because they're holding on to the shares, that's why the price action gets smaller and smaller to the point where it like almost goes into like a funnel, like into a point like this, and then it manipulates that low to throw like a chunk of shares into the queue to feed the people in the queue who are going to be whoever's waiting in that area, which is buyers, right? And so if buyers are waiting in this area, then they're gobbling up all those shares that just, when they manipulate this low. And so they just hit a bunch of stop losses and everything and just threw all those shares right into buyers' hands, which now we have all the buyers who got their stop losses buying shares, plus we have all the people that were in the queue who bought those shares. So we got twice as many people buying shares, which spikes demand, which causes this to launch up. And so that's the easiest way to see it, is you just have to recognize that these big bounces end up they get smashed and become super small and tight, and then price action becomes like dojis almost. That's when when you've got repetitive dojis coming back to back to back, when you know you're in the area of it being close. Then you wait for manipulation to the downside to free up shares, to feed the queue, and then boom, you've got your explosion outwards.
But now we need to see if they can break this swing here. The fire swing going up.
Yeah, and so now they're trying to see, like, you just had this explosion outward there and pretty bullish candles here. So it really shouldn't run out of steam here. It should continue to give you, like maybe it gives you a smaller candle here, or if it gives you the exact same size candle. Same size candle means that very healthy bullish run up. Smaller green candle means running out of steam, and you start to see smaller and smaller candles probably. And then you'll see like one big one, like one final big one, and then it goes right into like indecision candles. And that means exhaustion. And if you start to see red candles, then that means that they're trying to like feed it, refuel it to go up. And then if the next candle is like an indecision candle, then that means it's a fail to go back up on that refuel, and that means it's coming down. And that's so like micro analyzing anything again, but
I like these little things, help.
so look, we got a refuel, right? So we're expecting a green candle, a green run up right from here. And that was a push. Yep, we got a push up right there though, see? So that was the attempt to go up. And so if it doesn't turn inside out, then that's a fail. And then you got to push down, which means it's gonna start tumbling here. And it could be the timing, right? You always got to think like maybe 690 or 133 isn't perfectly aligned to capture all of that, the push down of this candle. And so you just wait for it to attempt to go up and be green. Now, if that turns inside out, then it's a fail, and you have a short there.
So that red candle did break the swing.
It touched it.
Barely.
Yeah, it touched it. And that's kind of like a trend too. Like that's a trend line too, you know, like sideways. And so then you have channel, like you have another set of channel rules. Like it's the same, like there's different, you different ways, perspectives, you can look at different things. All right, so if I break into a new area of price, right? It's like this, I'm coming down and I'm breaking into this new area that's lower than this high up here. And so now I'm in a new area of price. And so I need to define where my support and resistance is. Well, the only way I do that is to come down and hit the same area and hold that area twice, right? And so I've pushed down in here and hit a low and then exploded upwards. And then I hit this high and I found resistance. I bounced off of it. I came back and hit the same high, but I got a little bit further this time. So I came back down and then I retested it again for a third time and got the same area as I did the first time, right? And so can we agree that I found my support or my resistance right there?
Okay.
People in the chat? I'm a Ramba, right? I don't know where I'm going first time I'm in your house. I'm going to bounce against this wall a couple times to figure out where that wall is. Boom, I hit it. I come back. Boom, I hit it. And I went a little bit further for some reason. I come back. I'm like, I'm not sure. Let me test it again. Boom, I hit it. I got the exact same result as the first one. All right, I'm going to go with that and register as that is the high. That's the resistance area, right? So now I'm going to come down and I'm going to find the bottom here, right where my support is. And I come and I'm a Ramba again and I'm sucking up all your trash, and then I hit this wall here and I bounce off of it. I'm like, whoa, okay, let me retest that. Boom, I hit the exact same area. Okay, well, good. I'm gonna register it as like a sofa. And so now I'm gonna go back the other way and I'm gonna find the middle, like where my middle is, right? Where the middle of the room is. And so I go up and I hit, okay, and I come back and then I go up and hit again. And so then I'm gonna say, okay, well, that's the middle. Well, now I want to retest the low. No worries. I'm going to retest the low and see if that's still holding up, right? Because before I go and make this journey across to the other side of the living room, I want to make sure that I've got everything straight here. I want to make sure that there's not like a opening here that goes into another room or something or whatever. And then boom, I hit and I actually hold an area higher than where I was before. And I'm like, okay, so there's another level of support here. Well, I actually hit it, bounced off of it, hit it again, went a little bit deeper, then bounced off of it, you know. And so, but still didn't get back to the other one, but it's still higher than the last one there, so I'm good. All right, so now I know I got a support underneath me that holds me in case I fall. Now I'm going to go up and see and retest this mean. If I can get through the mean, then I'm going to retest the high. If I can get through the high, then I'm going to try to find support on top of it. But if I can't get through the high, then I'm going to bounce off of it and come back to the mean, right? To make sure that that's still there and support. And then once I check to make sure it's still there, then I'm going to go back up and retest that high again. And then if I can't find support on the mean, then guess where I'm going to go? I come back down to the bottom of that room and recheck the support there again to make sure it's still holding. Because I'm just not quite sure that I've got enough to make it up here before the sun goes down. And I need to recharge, right? So I'll come back all the way down here. If I can't make it back up here, then I'm going to come all the way down here and I'm going to come down, check this support to recharge. Does that make sense?
Yes.
So you got to think of like, kind of like you're a machine and you can't see, you don't have eyes. All you know is I bumped into something here. I want to bump into it again and make sure that's a wall. All right, register as a wall. Bump into something here. I'm going to check it again. Okay, that's another wall. All right, so I'm going to put a charging station here and a charging station here. Right? Now I'm going to go up and going to check the mean and see if I can find the middle here. Boom, I found it. I'm starting to run out of energy. I'm going to come back and I'm going to recheck my support. Boom, I'm going to recharge here. I'm going to go back up. You'll have fun. Recharged, good. Now I'm going to come back up and recheck that high again. Boom. All right, hit it, recharged. I go back and for some reason I bounce off of something here and I can't get back to it. You know, here I bounced off, I can't get back to it. I bounced off, I can't get back to it. Now I've wasted enough energy here that I need to go back to the other side because I know I can get back to it. Come back to the other side, see if I can find it. Boom, recheck the support. If I find it higher, you know, than I did before, then that's great. I can recharge on the slope, I guess, because I'm skilled. But your support tends to follow your trend upwards anyways, and so that's kind of like the idea. And so maybe my wall is sloped here, and so then I register it as like, okay, well my wall, what I thought was here is this, right? And so now I've recharged here. Now I'm going to go back up and retest this high. If I fail to retest the high here, guess where I'm going? I'm going to break through this area to get back to my original support and recheck that. And if that doesn't work, then I'm going to come down into the other side of that and then come back up. And so basically gaining momentum every time I do this. Hopefully that makes sense and not too confusing. I know my analogies are getting weird.
No, I get it. I just wish it would dump already.
And so that's what like your, you know, like a zone. That's like these are the rules of what happens inside of a zone. So whenever you see price action hit a zone, you know it's going to find it's going to double tap this high. It's going to double tap the low, and then it's going to come back and, you know, it's going to check your mean, recheck your support, run for the high, fails to hit the high, give it another test after it comes back to the mean, fails to hold at the mean, comes down deeper, tries to hold before it gets back to the low. Hopefully that because your bulls are following and your support's rising with you. And so that means you're on an incline, like you're trying to cut your channel, your zone, into like you're trying to create another channel going up at an angle to make it more bullish, right? If that makes sense. And so you're taking your sideways zone here and trying to divide it into sections that are going to give you some leverage to start moving upwards. And so, boom, yeah, trying to, but anything I can cut from going down here, I should be able to get it back over here. If I can't get it back over here, well then I'm going to give it back twice this way. And so, I mean, that's really all a zone is identify your, you know, whichever side you're closest to, you know, just identify your low, identify your high. You know, reconfirm that your support is rising with you so that you know that you're bullish. And then if it's not, it's on a decline, then, you know, understand that you're kind of in a bearish channel inside of a zone, which means that, you know, it's kind of set up to dump really until it becomes bullish and switches it to being in like this.
Oh, the bulls are taking control of here.
And so there you go. Now you broke out. Now you're going to find support on top of this area. If you can't hold support and you fall back through and close, it's no different than just stopping right here. And so, well, how do you trade this? You know, like how would you trade that then? Like how do you turn that into like a trade? Well, if I know I'm tapping this area twice and then I start to see that it's red on the second time and it's indecision, so it means that it's running out of steam. And then I see it, you know, turn inside out. It was like green bullish and then turns inside out and leaves this long wick and then ends up going red underneath that indecision candle where I had all bullish candles before. It most likely means I'm going to go find the bottom, right? Well, my bottom is probably somewhere in this area where this move started from, right? And so I'm probably going to see resistance when I get to that FOMO area, which is my first big green candle after I turned. So I'm probably going down there, right? So I probably have a short. Once this breaks this low that, you know, this candle here, it turns red, I probably have a short from there down to, you know, the inside part of this turn right here. And so that's my target. I'm waiting for that to get down there, you know, so I can probably short it there. And then once it hits here, it's going to retest it. So I should probably wait for that confirmation, which is what? A W, right? So waiting for a W. And then once my W, you know, confirms that it's going up here, then it can get in and, you know, but you have a couple more turns here. So you're going to feel some heat here because you got in early. But if it's a bullish move and it's a bullish channel, then your support is moving up at an angle. So it's your pressure is moving away from you. every time it closes a candle. And then it breaks out to the upside there. And where's our target? Well, it's back at the high where I found resistance in the first place, right? And so now you had a second trade from here to here. All right, now when I hit that again and it bounces off of it and it's pretty bearish coming off of it, then you know that it's probably going to come back down to the mean. Now this one can be very short. This one can just stop right here and turn around and go right back up. So probably not the best play on the second time around from here. Probably what's better is to wait for this to manipulate the low of the mean. And then when you see it manipulate it and then start to go bullish back on the other side of it and not come back to this bottom trend line, right here, it leaves this space. You have a trade going up because you most likely are probably breaking out to the long side here. And so then there's your third trade there. And this happens over and over and over again. And what makes it really easy is we have zones for this stuff. Like we have zones. You just use the zones. When it gets inside the zone, it's easy to read. Okay, well, hit the high of the zone. Okay, now hit the bottom of the zone. Okay, now go back and hit the high of the zone. All right, now come back and don't hit the bottom of the zone. Show that you're bullish. All right, boom. Trade. And first time you hit the high of a zone, you're gonna most likely you're gonna bounce off of it unless you're so bullish that you just go right through it, But if you start to see all this indecision up here and it's starting to turn red and everything like that, then it's telling you that it's probably gonna bounce off of it. And so that's a pretty easy trade. And like you broke a swing point too, and you're just leaving wicks up there. It's saying I can go up there, but it's also saying that I'm coming down to resupply down here. And so that's an easy trade, to take. You're expecting to see indecision once it breaks this high for the first time. You're expecting it to come back to this turn here to refuel. You're expecting that your support is moving up at an angle and that it's moving away from this area right here. So that should give you confidence that you can get in a trade as low as you can possibly get inside this turn right here. Because we broke the high here, that's bullish. I'm coming back down here to resupply. If I stay above this area right here and bounce off of it, that's bullish. I'm not breaking through this area, that's bullish. Take the trade to the upside as low as possible right here. When you see that candle coming down, and that's kind of scary, whatever, but if you can get in there, when you have, and you can draw a diagonal trend line going up, you know that your bulls are following this trend line going up because it's showing you that they're stopping there and going back up. So if you can get in as low as possible here, like if it makes a swing point and it comes back to the swing point, like enter there, right? Put your risk right below that swing point there. As long as it broke this swing point over here, and then you're creating a higher swing point, that's like all the confirmation you need. All right, so I broke a swing point to the high. I've created a new swing point higher than my last one on the downside there, right? I'm bouncing, I'm coming back to it. If I close right up against it, I'm probably going up from here. I can enter that trade as low as possible right there. And you've got all that to the high there. It might be a little, you might feel some pressure right here. But I mean, that's, you can get that. On the flip side, I got a move that didn't equal this move to the upside here. So all that's coming to the downside. There's my manipulation to the downside here, right? And then it's bullish going up here. So maybe you missed this move because you're not quite sure it's going to go back up because it's underneath this right here. Well, once it breaks that swing point right there and leaves wicks up here and it starts to turn red indecisions, enter that on the first red indecision right there and let it come down back to this turn point right here. Easy trade right there. And you're just trading from the top of the zone to the bottom of the zone. Here, me. Yeah, what if here, let me do this. And I'll measure it. But like, what if this was my zone?
Okay.
Right there. There you go. And then bring to the front there. And then measure it. There to there. 29 ticks. And you're going right here. Right where your indecision pokes up, makes those rabbit ears, and the body stop. right where it manipulates to the downside and the bodies stop at the, above, right in between those two areas right there. Or the last swing point down here from this first push down into this area, exact same spot. So, I mean, you can make this pretty easy if you get really technical. The problem is that it's hard to get technical while you're trading because you kind of forget all that stuff. I forget it all the time whenever I'm trading. If somebody asks me a question, that's when I get technical and it makes it easier. So here we are, and so this move here is to get back to this channel up here. That's what this move's about.
Okay.
And so now this is that middle point here where people are taking profits because we just broke this high over here. And so now we got a bull flag going on right here. And so if you get another pullback, you can enter here to go back up because it's gonna give you, it should give you double this move right here. This move. You guys learning anything? Any of this help? How do you support that with the stochastics? Well, I mean, your pullback move right here, it almost gets to 20%. And so here's how you can use the stochastics, even if it's not at 20%, is, and it might actually be, I don't know if this line's right or not, but either way, if it doesn't get back to 20%, like look at your little poke here on the stochastics pointing down, it makes like a small M right there, and then it pokes down again. When that second poke is above the first poke, that's bullish. That's downward pressure that isn't equaling the last time it made downward pressure, right? And so it pushed hard here, and then the pushing isn't as hard here because it's running out. It's another confirmation that either one, they're running out of shares here, and so there's less shares to push, or two, your bearish incentive here, the bearish pressure here is becoming less, or basically the same thing. They're both probably the exact same thing because one kind of equals the other, right? If your bearish incentive is less, that means it's more bullish. It means that more bulls are holding shares, which means that there's less shares to buy because more bulls are holding shares, which means that there's less pressure on the bear side because there's not as many shares to push down, right? I know that I said that really fast, but it's the same thing, just different. And so when you see that, yeah, that's all you need is you see that right there. You know that's it's less pressure being pushed down, and so therefore it's bullish. You just got a spike there, a volume right there. You saw that? This might be the time to start buying. And so you look at this here, trend. Not that you need that. They might manipulate this in order to hit liquidity because they know that they had a response out of this, so they're going to take advantage of that and grab liquidity right here and then let it pop. So free up the last bit of shares that are there or whatever they hadn't tapped into yet. Put that right into the queue, to feed the queue in order to ignite it to go back up, to ignite that FOMO. They know they got a response right here, so they're hunting for that. They want to let go of some bears, take those shares and put them in the queue, break some stop losses of people who are entering right here, put that into the queue as well, have all those people jump back in going long, which makes it 2-3 times the amount of people in the queue, and then now you're starting to see the result of that right there in that candle. Fueling the FOMO. Does everybody see that in real time? Like, does that make sense?
We have moved beyond our average daily range.
Yeah, so we should just break loose and go buck wild here then. We're gonna go streaking through the quads. And so probably because this didn't path this high up here and close up here, and now they're having to manipulate this low. So they're trying to find that liquidity spot that's going to cause it to ignite up, and so this one didn't do it. And so it's never foolproof, but you can see it trying to make that happen, right? And so now it's soaked right back up the end. Is what you want to see it soak back up because that means it hit something. It's like striking oil. And it also helps to watch, you're overbought here, right? And so this could,
60-minute.
but the difference is that, and we might be overbought, but if we're hitting absorption, we're going to be overbought because no one's selling shares. Now, if they're just having problems like this getting through, then it's going to come down. They're going to keep manipulating this low. And another way, and again, it's a micro way to look at things, but if I can't break this high, I got to sweep this low. If I can't break this high, then I got to sweep that low. And it continues like that until, explodes upwards. So when is the best time to get in? Be patient, I guess. It'd be the best time. Just wait for it to give you the best of all scenarios. This comes back down, maybe makes another M like this. It's probably like your best time.
I never thought about the stochastics having the M and the W.
Yeah, and sometimes it's really subtle, right?
Yeah.
But when you get them like well defined in there, and we're expecting this one because it's up here, we're expecting this one to kind of like do it in the middle here somewhere. Because you're not expecting everybody here that's strong hands is going to dump their shares. And that would cause it to come all the way down. We're expecting that some bears that are holding shares, we're getting rid of them, right? And so we're probably going to go inside this area here, and then they're going to end up probably buying long, or new people are buying long that are in the queue. And so we're looking for it to make a turn there. Yeah, let me see what I have.
It's three of wonders of ATM.
Oh yeah, there's something for everything in here. You want the prop 10x one? You doing the YM?
What is that?
It was the one that we used for 2 targets. It's effective and safe. It's probably the one I should give you. This is for the YM, I think. 52 target. Maybe not. Let me look. Here it is. Found it. There you go. So 20 tick stop. I don't know if I'd use that, but whatever. Oh, this is a 3. Well, I thought it said 2 target. Oh, it said 3. Prop 2 contract. There's your explosion up there. Sorry. But you got your turn there, right there. 24 tick stop. Jeez. Yeah, I wouldn't use that. Me personally, I'm like, I mean, you gotta find what works for you, but like, I think like 16, 12, 16. And you know the easiest way is like measure your pullback. Like, oh, geez, what am I doing? Like, let's say I want to get in, uh, on this trade here. Like, this is my previous pullback there. I just want to see what the measurement is for the stop, and then yes. That's 19. That's 14. And so, I mean, I don't think you can go wrong with 16, but it still says 3. It should be 2. That should be 2. And then you do 1 and 1. Your first one, I mean, I think 16. And you just have to put what you feel is best for you. Profit target is 8, which is only 50 bucks on that. If you want more, I would probably put it to like 100. Me personally. Which is 16 or wait, no, is that 20?
20.
Oh, why do I have 8 as 50? That makes sense. That's
20 is, no, that's a,
this is 40 right here. So you want this to be at least 10 because that's 50. And then no strategy on the first one. Then on the second one, you leave a 0. And then on your stop strategy, it's just 8 minus 8. So it hits profit target of 8 or trigger at 8. And then it automatically moves your stop to -8. So it cuts your stop in half. And that's why I like 16. And so it's like 16 to -8. And then as it moves up, oh, why this one doesn't have it? Oh, because you're manually adjusting it. But if you want to have it automatically trail, then you would just do 1 step, and you want to maintain that. Either you want to maintain the -8 as your trail, or the 12 or 16. I kind of feel like normally it's 12 ticks, right? That it pulls back. I don't know. Let's say you keep a 10 tick stop loss here. Profit trigger would be, so you're already breaking even at 8. Let's say when it gets to 16. So it gets to 16 ticks, it gives you a 10 tick stop, which means it moves you to +6 if you're not already there. And then every time it closes a candle, it checks to make sure this is in line. And so you can do it like that. The profit means guaranteed profit. It has a flag out there, and so if you hit that, it automatically takes profit at that point. And so that'll give you a pretty good trail there. And then if you feel like you're getting stopped out too early, just move your stop back. You know, I would try 12 rather than 16. You know, 18 on bigger swing days, you know, to kind of give yourself some room there to be, you know, to make profits. And so that's why I was measuring. And then you want to save it, you know, name your stop strategy, save it, and then save your template. And so that way you'll have it and name it something different. But if you measure your middle move here, like so if this is your first part of your W, well here, this is your first part of your W, that's the middle, and then this is the pullback right there, and then that's your launch. Then you measure from the middle to the end here of your first leg, and that'll give you your risk factor on what. And so that says 14. And so maybe having your stop at 16 is perfect then. So that way you have a tick to play with in between. And then you move this like you did like this, that. You can see as price moves up, pulls back, well that definitely stops you out. If it was, is that how it runs it? Is it like this? Oh, is this from your, yeah, from price. This would be a double move down right there. So it'd almost be like you would need this much. That's 28 just to survive that move if you wanted to stay in it. And so then when it hits that high there, it doesn't even come close. I think 20 would have gotten it. Starting to run into resistance up here. See, I think 28 is excessive, like 20 to 16. See, that's 20 right there. So 21 then.
So you're kind of like measuring the pullbacks to know like what your stop should be. That's what it is.
Yeah, trying to get a feel for like what this was. Like this one was 28 and then it was 20. And so it does, that's why there's steps. It tends to, if you're in a bullish move up, your pullbacks become less as you're going up. They get smaller, but then as you exhaust out, they start to get more. And so you could do 3 steps and have it, 28, then cut it to 21, then cut it to like 16, you know. You're welcome. And so now we're failing to get up here. That was our turn. This was our double move here, which we might have gotten the meat of it right here, but not the full extent of it. Now we're pulling back and reaccumulating again. But if you look at your accumulation, your bull flag here is up at an angle, whereas this one's kind of sloping downward. And so you can see that you're starting to get heavy, and then, whereas this one bounces out to the low side to go, whoa, look at that. Wow. That was like instantly, that was a big order. That means somebody's probably buying right here. Which one is this on? Oh, this should probably be, put this on 101. Buy this. Buy it right here. Move your stop up. Here, profit target. Dude, that was like a spit out of like 20 some candles in a row. Like 17. What was this? Get it to measure here. I feel like it went to like here. Yeah, it did a whole cycle right here of candles instantly. So that means somebody, look at all the indecisions going sideways there. Somebody bought right here, like a whole cycle worth of candles. You rarely ever see that.
They slid that in.
Yeah, they did. I mean, it's possible it was profits, but still somebody bought in order for somebody to take profits right there. And it was instant, so it had to be a buy. It was all these people, all the retail selling, and some big whale came in and bought all their orders going across. And they did like a buy window, like I want to buy between these two right here. Because if that was like, let's say you take 17 times 133, it's 200,261. And basically that's they cleared, so on a DOM, the DOM that runs sideways like this, someone cleared, like a whole section of cells. They like a buy, like they bought it from here to here. They bought it all up. And so price where there was, orders are down here to buy, they cleared them here, so they all jumped up to here where the next set of orders are. Go ahead and move your stops to a no-lose situation. That was something right there. You don't see that every day.
No.
I'm just glad I was in the frame of mind to say buy it right here. I told you they want to get up here. Back to this trend line, and you see like it's incrementally always getting higher, right? And so it becomes like a reach, like an impossible kind of situation the longer it goes. And that could have been a market maker slowing it down right here, waiting for it to fizzle out, and then went and cleared all the buys out to free up. Yeah, yeah. And he just saved it all up and it just went through a whole cycle in like a second, which caused this to clear there's no resistance in this area now. It just goes straight up. And so you should get a block from here to here. This is your measurement now. Put that on top.
What do you think? Dump at the end of the day?
Probably after hours, where everybody's taking their profits out, and watch it crash down and see who's going to be left holding the bag. All right, Melody. Go ahead and move pretty tight here on this guy. 40.59. So this would be 3 times that move right there.
Okay.
Double is expected. 3 is a reach. 4 is like they get giddy whenever they get 40 or 4. If they can get more than that, boy, they're like dancing. But for their continuation to keep going up, they just need a 2-to-1, or their efforts is half of the results. When they start having to like pay for their results, it's not worth it anymore. I'm gonna try something to be safe. I'm gonna put it underneath this block right here, this measurement. And so I'm at 57 on that. You also have a trend line going up at an angle there. So should technically find support here before it does here. And so that would be just the same as like if you had a horizontal zone right here. And that way we would have like a bullish channel here cutting through the zone so that our support is following it up. But if you're already on the outside, you should try to find support on top. And that's the move to break out to go long. So like if you're in a channel going sideways, right? but you have a bullish channel going up, and you're kind of like following your bullish channel going up. Well, if you manipulate the low of your bullish channel, then go up and miss the high, then come down and manipulate the low again, that should give you enough momentum to blow out to the top, right? And so like your horizontal channel, you've already spiked through it twice. And so the first time you didn't hold it, but you didn't come back to the bottom of your horizontal channel the other time. So even though on your, this gets confusing from here, even though on your diagonal channel going up, let's say you hit the high here, but you missed it on this one, you're not, on your horizontal channel, you're still above your channel, your zone. You're still above the zone. Or let's say you missed the diagonal high here and you pull back and then you manipulate the low of your diagonal channel here to get liquidity, you're still, at the same time, you're still bullish because you missed the horizontal channel low here. Does that make sense? So what's bearish on a diagonal bullish channel is bullish on a horizontal channel. And so they balance each other out. And so me pulling back bearish and dropping out of this channel seems bearish, but on a horizontal channel, I'm not even able to get past the mean of this horizontal channel, which means
Okay.
I'm bullish, right? And so that catapults me back up into this channel, which if I close inside this channel after being outside the channel, gives me a pop, right? And so then I get a pop because it's seen as being bullish. And when you break out of a channel, come back in and close, it means you're retaking the channel. And if you retake the channel, you get a bullish pop, which should send you outside of the channel to the upside. And so that's what happened here. So now, because of that, where you would normally find support, which would have been down here, now you're finding it, at the top of the channel because you got that pop that sent you up here. And so where you would normally have found support here, you didn't find the support here because you found it up here because it popped you up outside of this area. Does that make sense? And so that is kind of like, it saves you from having to come back down because that pop basically is like a boost pad, right? Like on like Mario Kart or something. Exploded you upwards, and so now your support is up here because that's where you checked for support. And so when you come down, you're hitting that area. Let me move my flag. Yeah, hopefully before it gets me. Get up there. So just,
All that or whatever.
and so then move your stops to the inside part of this dip right here. Give it room for the wick. So say like 65. Other one's going to go to the bottom. So this was right, this measurement, this box right here, I moved my stop underneath that box and it did find support on top of the channel. And so that kept me safe to be underneath that box. And so really I could just keep playing my next support. Go. Because it's all green. This was manipulation right here. Or just, well, it was manipulation because of the amount of orders that came in at one time. They held it long enough to get enough and then cleared them all so that the bears didn't have a chance to respond to it. Cleared the window and all the orders, all the buy orders started up here that were already up here because there were no more buy orders over here. And so it naturally, the way the DOM works is that your buy and ask is set to wherever your orders are heavier at, right? Well, if I clear all the buys in this area, well, now my ask is way up here instead of down here because I cleared them all. And so then that makes it, that kind of incites FOMO as well. So now like we're wicking right into the top of this measurement right here, like to the T, or like right into the top of it. You see it? And so naturally, if we're falling from here, I don't want to lose that profit, so I'll just be right underneath that on my target, and then I'll I'll put this one because we're not going to fall all the way through here. We'll probably catch somewhere in the middle here. So I'll put this one right underneath this guy here, and I'll give it this space here to play in. Let's see. And I think that here's what I've been trying to give myself patience to do, and I have a hard time because I have to make calls, and so it's hard for me to stay out of stuff. But I get in trouble when I make trade calls a lot of times because I'm constantly wanting to be in something because I want to call something for somebody. But if you just wait for things like this to happen, and this is not going to happen all your time, but something like this will happen. You'll see it consolidating, and it'll break out to the low and manipulate this low, but create a W down here underneath it after this gooseneck of buys over here. You know what I mean? And so clearly it's just trying to hit liquidity to run up. And so you do a buy there, and then that's a move worthy of being in on, right? Because it broke out of your consolidation, right? Because that's where we look for M's and W's, is outside of consolidation. When it breaks out from one side, it usually goes the other way. Or after a big move, you look for and then when it breaks a swing point, right? And so in this situation, if it would have broke down to the downside, it probably would have covered all three of those. So now I'm going to move my target back into this channel up here so I don't have to worry about it. And it might not make it there. But this whole move, we knew this move was happening because of this over here. It all started with this channel analysis where it failed to get inside this channel and it started spiraling down and sideways because of it. Well, and I said when this started doing this, I was like, after it starts to make a new channel going up, it's going to want to try to get back into this channel up here. Didn't I say that? And so now that, because you have that thought process in your head, because I had it in my head, I knew that once it started goosenecking up, and breaking out here, that I just needed a reason for it to continue to go, to show me that it's going to do it, right? And so that was my reason when it did all those orders at one time. It reminded me oh yeah, they're trying to get back to that channel. Now you're starting to get a lot of indecisions right here. Look at my measurements though. Look at where we're at. 1, 2, 3, 4. And we're starting to fizzle out here. So I'm going to do another. It's possible to get 8. It's crazy, but it is possible. And this is what you would call what was I gonna say? Oh, this is what you would call when they talk R's, they say yeah, risk reward. You got what's your R trade or whatever. This would be like a 1-8, a 1 to 8 R, or if you got in at the bottom there, like a 1 to 10 or a 12 or something like that. Like it's stupid, it's like one of those crazy trades. But you can orchestrate this if you pay attention to where, what's going on. These channel moves like this need to get back to this channel is not some crazy shit I'm saying. It's for real. They are going to try their damnedest to get back to this channel. And when I say try, it's not like any other move where they go up and fail 3 or 4 times. No, they're going to do and pull out all the stops to manipulate it to get it to this channel. You know, it might not make it in there, but they're going to do everything they can to get as close as possible.
So essentially, that yellow line was a little bit further.
Yeah, the gold, that gold marker, that pie in the sky. And even still, you're not there because every candle after that, you're still going up. And so that's where it becomes like almost a mission impossible, right? But that's why they put it up there like that, is because they want it to be so like crazy that, you know, if they can get it. So where are we at from this move? We're 1, 2, 3, 4, 5, going into 6 right now. That's insane. I know people who trade 1R. 1R, that's what they say it is. It's like 1R. So this would be like, so whatever your risk is to whatever your reward is. And so like 1R would be risking one of these blocks to make one of these blocks.
That's pretty much me.
I can't do that. I don't want that. I want at least this to this, at least. But if you're really gonna get me going, give me like a 10R. Give me something stupid. That really gets my ego. Because that means if I got a 10R, that means that I got in, like I knew something, you know what I mean? Like I got in stupid low. And then it just went. So it wicked right into this area right here, that gold marker. And that's gonna kind of probably fall back and try to catch itself. So at this point, we'll probably move our stops up. I forgot. Probably want to go, I don't know, maybe get all those dojis right there. You get the next box down. If it fails to hit 1, it starts tumbling down, but this one hasn't failed to actually hit it, the top of it. So it's probably not going to come all the way back down through this box. So you're probably, honestly, you're probably safe in this area. But my real stop I'll probably put in the next box down. And so I'll be at 96 and 09. This was like 1, 2, 3, 4, 5, 6. It gapped down right there. That's a sign right there. This thing is going to probably tumble more than what we want if it doesn't retake it to the upside. It's trying to right now. I think we get 8 out of this because you're probably going to get an exhaustion candle, which means that you're probably going to get a really bullish pop here. It's going to go up until it hits exhaustion, and then it's going to like just dump. And that's what I mean. Like when they really try, like you'll get something like this at the end of it. I don't know if that was the exhaustion though. It's kind of lackluster. It did move the
Yeah, I was
box.
looking at that.
I mean, you do have all this though. You know what I mean? Like this bullish move here, which was way more than any of that. And then now we're refueling almost like every candle now. And that might be stalling to let orders pile up to the upside here, maybe? Because there's got to be something to buy here, or there's got to be somebody to sell here. You know what I mean? And so it might be waiting for that. And if they're not getting it, then maybe they have to tumble down. I think we'll probably call it after this, unless you got more questions. Did you learn anything?
I learned something.
Good.
Like you reminded me about the boxes. I totally forgot about the boxes, but just like the whole, you know, trend thing, drawing the trend lines. Um, you know, if it's going to this side, it must, probably go to that side. Yeah, different.
Yeah, just know that if you see manipulation to the trend line, that you're expecting it to manipulate the other side. If it fails to manipulate the other side, then expect a move to the other side stronger.
Okay.
If it fails to give it to the other side, then expect it to come down and usually it will dump then, right? Like it'll come down. Fails to go back up, back to the high, then you expect it to drop out of channel, which is another short. And so this is more like that move. Your exhaustion candle is like this guy right here. Ooh, is that it? Probably move this guy. I don't know where it's gonna come. I think they got more. If this guy keeps going green, if it goes green right there, yeah, I'm gonna put it right underneath that guy. Because if it turns back around from there, then it's dumping for sure.
So bullish.
Mm-hmm. And I mean, you can make a whole week off of this move alone. If you can know that this is gonna happen, like you know that if you track it and you see that it's gonna happen, and everything kind of lines up right. Now it's $1,000 trade right here, two contracts. I mean, plus the one contract where we took profit on it, whatever, probably 150 bucks maybe. So 1150. So since I've been trading with you guys this afternoon when everybody left, I'm at 1800 on my sim.
Nice.
I think for me, like if I could just be patient enough to wait it out until I see something that really like piques my interest, like really like gets my brain, going. I think that's really the key for me. Like if it's not really getting me like thinking like overtime into it, then I probably don't want to be in it.
I like the shorts better than I like the longs. The longs is just take those.
They're like cruise control though.
Shorts go faster. It's more exciting.
Well, at least you know where it's going to end. It's either going to fail to hit that channel, or if it makes it through that channel, it's going to keep going. But you'll see an explosion. If it gets inside the channel, you'll see it explode upwards. And so I'm going to
R3.
last target here. I guess that would be a recipe for success there is if you think about like where your R's are. If you're above R1 and you're making this move, like you're showing that you're trying to get back to your trend line by the time you hit R2, you know, then you're probably looking at, this move happening. Because it's not every day you get to R2 or 3.
Exactly.
Now, this move does happen like like it happens always, but for it to be really bullish and noticeable, I think that if you're kind of in that situation, I think that probably makes it a little bit more dependable.
Candles are getting.
Hmm So I got mine at 50.40. Then my other one probably gonna get pretty tight as well. Maybe like 50.30.
What's your thoughts on volume profile?
I don't really use it as much. I do like that JT Money one, JT Econ, whatever, where it shows all the bid and ask ones. I like a volume profile that's bid and ask, and then you can kind of see like where the emotional buy and sells are. But it's not needed because I mean everything's measured, right? And so for me, it's more fun to do the technical analysis. I think it gets me lazy. I just start FOMOing in on stuff whenever I see stuff like that. But if I keep things, oh, get this up here. It literally did like one tick away from my target. So it should try to. I think so. Let's look. I'll move this up higher. I'm gonna put this right underneath that consolidation there. So we are at 1, 2, 3, 4, 5, 6, 7, 8. We're at 8 right now. And then we'll be 9. We're in 9 right now. And then this would be 10. I think I've seen 12 once. I think I have a picture where I did this for the first time, these boxes like this, and was breaking down a move, and I was like, I wonder if this is like a measurement. And so I had like a measurement of this thing, and I was like, God, I need like 12 times this move. It's insane. I think it might have been more than that, but it was special. So we're at 9. And so this is probably that perpetual move that happens that people like always try to short and they end up blowing up their accounts because they keep trying to short it. And so like this is like I'm that guy too. Because I have a hard time getting in after it's been this high. Like it's got to drop, right? It's got to drop. I don't want to get in, you know? But if you understand that this is the move, this is what it's doing, and you see the trend line, you know that it's trying to get back to that, it makes it a lot easier to like just have faith and jump in, you know what I mean?
Remind me, where was that trend line from?
And so it was
Okay, the move earlier.
so it was when we broke out, we had this like consolidation turn where it was manipulating and then it hit the zone for one time to hit absorption. And then we are talking about feeding the queue, you know, double the people holding shares. And then that reaction was the FOMO, but then like this reaction here was retail because it was kind of janky. And it became more uniformed once it kind of like got into this area and started like, instead of it like going like curving like this, it was kind of like holding this like diagonal channel at an angle because it's more, because this is where they got involved and said, okay, well, we're going to have to control this upwards in order to get to where we want to, or else it's going to take forever, you know? And so they start manipulating this this move to get it up to drop it to find support. And then if it holds support, that's what starts this move is when they drop it, because like the channel is what makes is the is the pie in the sky move, right? Like it starts the pie in the sky. They drop out of the channel because it's hard to stay in the channel for too long a period of time, but they want to find support too. So then when it finds support, it fails to get back to the channel because the channel is again the pie in the sky, and it tumbles down. And so after it tumbles down and it starts to reverse, and so you'll get that like clear like manipulation of like a level. So this is where we drew our blue zone. And so it manipulated the low and then it got back into that channel and then started to show support higher up and break out. When it broke out here, that was the start of it trying to get back to this channel here.
Okay.
And then you started getting bull flags. And as you're getting bull flags, one after another, like that, that's when it becomes, that's your confirmation. Right here. And so you get your first bull flag and it kind of dips down to go up. The second one didn't dip down, it went straight across and then did like it didn't come down to the bottom of that channel and went up. And then that was really the start to get backing into that another channel that's going to take us to the channel. I guess I could say that. This guy right here. And so if you look at our price action. So for the first time we broke out of that channel. And so that's how you know like it's done. Now you might get another push up or whatever right here. But like you see what I'm saying? Like that orchestrated channel of price action. That's why the channels like that channels rules, all those channel rules I was talking about and everything, the channels are important, especially for this move, is so you can gauge one when it's gonna do it. Because, this stuff was like just bullish pops. This is retail right here. This is the manipulation. And so that's how you know you're going to have that move, is because you go from these bull flags where it's all green popping up and then you go into a bull flag, all green popping up and go to a bull flag, and then it breaks out and it goes into like this orchestrated like channel run up. That's your perpetual move up that blows up your account. This is the first time they took a knee since going inside that channel. And so they manipulated the price because it was retail up until it fizzled out. But after that, they channeled it from there to there. That's 109 ticks on 47 bars. They orchestrated that up. It's still retail buying, you know what I mean? But it's precise buying and selling on like a diagonal channel going up. Retail's not that, they're not that coordinated. Do you know what I mean? Like,
Yeah.
they're special. You might have, I'm sure you're going to have another pop right here. And you got double channel crossing right here. If it can get inside one, it'll pop up to the high of it and it'll push you into the other channel. And if it gets inside that, then it'll pop up to the high of that. Then it might actually fail. But if it can't get back up there at all, then it just dumps like so. But they've accomplished what they needed to get it to this point. That's why they let it out of it. So now it's a matter of it can find support here. If not, if they find support, it takes off running and more profits. But if not, they start their distribution. And so this is what they would call like the last point of structure, like your LPC or LPS, last point of structure, LPS. And then your buyer's climax comes what's after this, and that's usually your exhaustion candle. And then after the buyer's climax, you'll have like what's called like an automatic response, which is how far price will drop before retail catches it, where they actually perceive its true value to be. And so to let it drop, and sometimes it's deep, but a lot of times it's like somewhere within this realm right here. And so then they'll let it drop, and then retail catch it by themselves, and then it'll bounce, and then wherever it goes up from there is your secondary test at the high, and that's just all retail from there. And usually it's a fractal of whatever this move is. There's your aliens.
So Oh, was okay. Was the market super bullish yesterday too?
No, it was choppy and messy.
Yeah, it was. I remember choppy, but I had to leave early,
It
so I didn't
was
look at it at the end of the day.
I didn't really trade much. I tried to trade a little bit, but it was just so bad. It was like gross. Um,
Yeah.
I didn't like it. And my algos, like I had algos I was running to see if how they would do, and they just did miserable because it was so choppy. And
No, I was looking at the comment. Spaniard said it wants to take all the stops from people that shorted yesterday. So that's why I was wondering what the market.
uh oh, I wanted to take. Sorry, I didn't see your messages there. Hey, I want to take all the stuff people shorted yesterday. Get the 4-hour candles. Um, I'll post it to my YouTube, Spaniard. Yeah, it looks like it's gonna fail here. It's gonna have to blow past this low if it can't retake and get back in that channel. And I believe this will be the second time down. So it's failed twice. So this probably does go deeper right here. I can't close it fast enough.
Short. Yeah.
I'm gonna wait for it to pull back one more time. It should fail here. Yes, this would be like a buy. This is your buyer's climax that's about to happen because you're gonna get a pullback. This is your measured move right there, right? So we're right on top of that. Cutting through it. Soak back right here. Good sign that you're hitting it. I'm gonna wait for it to. I'm gonna put this one on a 34. 34.
Oh, Spaniard said, "What's your YouTube channel?"
It's. I can't wait for it. Yeah, I think I have a copy. I have it right here. At I can't wait for it. There you go. So just put an at in front of that when you type it in. So what do we get up to? Do we go past our boxes? 1, 2, 3, 4, 5, 6, 7, 8, 9. We crested. So this is what I was saying. If you fail to reach the high of any of the boxes, that's where it tumbles out. And so this one stopped short of hitting that trend channel, but also of the 10th box. So it crested the 10th box and then dumped out of it. And so that was where you get this double drop out. This is probably where you bounce. Here, I could be wrong. Yeah. Nope. Nope. Definitely not.
I thought they were gonna get aggressive with it when it came.
Here it is right here, though. Maybe. I don't know. There was such an aggressive push down. Why is it only 2? That's 2. Oh, because I changed my thing. Oh, I was wondering why this was weird. It's not even the one I use. Let's buy it again then. There.
I don't see your YouTube.
It's at I can't wait for it. So you,
I did that.
YouTube / at I can't wait for it. I'm on it right here. I don't know why it does the, it broke it away from that. Did you find it? There's a guy in a suit getting ready to like football toss a baby.
Okay.
He's celebrating his win. He's like, yeah, and the baby's like, ah.
Yeah, I posted in a while.
Yeah, I don't. I tend to post on the Liberty Trading one more,
Yeah.
but yeah, I'll post this in there.
Let the rules. You must like the video.
Oh yeah, don't you watch my videos and not like them
No,
if you learn something from them. And if you don't learn something from them, then yeah, don't like it. But don't you dare watch my videos and not like them. I'll grill you.
and don't tell them you watched the video and didn't like it. You'll have a problem.
Yeah, we have problems. There's just some some etiquette there. Like I don't get paid for that shit. You know what I mean? Like damn, at least you can do is just pay me a like. And then, like I'm asking for your breadcrumbs or anything. I don't want to chip off your plate. Just want to like. You might burn a half of a calorie by pressing the button.
You're long?
It should try to bounce. It should to get it out of the way. You know what I mean? Like it should try to retest.
It just
I don't. That's not really a retest. They should really like, because this is kind of like almost like the same thing. Like because you always have like those two mounds. And then that one fails, and then you get a retest, and then it dumps, and then it really dumps, because that's how you make your
yeah,
bigger M. But look at it.
yeah,
You got an N, a lowercase n. Yeah, so it's coming. It might not be right now, but it is coming.
yeah.
1,500 for the day.
I didn't think it's that long. Short.
Yeah, I mean, it's a better chance of it going down than it is up right now, honestly. 204 though. They probably drag this thing out.
Yeah, they're gonna drag it out to like 3, maybe 4.
This is your playground right here. You're gonna play right in this area.
Mm-hmm. And then go down a little bit more.
Yeah. Put like an insane amount of candles here trying to go up and going deeper and deeper to get back up there. Then finally just be like after like the eighth time going up, then they'll do half the move back up, like it fail to get back up on that eighth one, then it'll drop. I tell you, the short is the hardest thing to catch. Like a true reverse, like not this one. Like that one's easy. But like a true reverse is the hardest thing to catch because of the amount of times that they pull it back. And it looks like they're dropping and they manipulate that low and then still pull it back and then go all the way back to the top. Dude, like way past the middle too. Like up here, then they drop past the middle, then pull back, fall off, the support, then go deeper, then pull back and then find support and then take off and go. Like, like you gotta wait for it to it literally has to clear this area. If it doesn't clear this area, it's not dropping.
Yeah.
There's an area in there and they just fuck with people. Just that's all they do. And it's big enough that you don't really see it because most people would have to pan their screen out or move it or something like that. They just think that if it goes below the bottom of their screen, then it's dropping, it's done. 5698. Here. Why can't I move this stuff? What's wrong with this thing? Oh, it's saying attach. Cancel. I don't want to attach. I don't know what it's doing. Reload my screen. Oh, now it's just getting stupid. I'm closing this because it's not functioning right. Well, I think that does it for me. I'm gonna get this thing ready and upload it.
Okie dokie.
You guys have a great weekend. If you need me, let me know. Yeah, always. I'll see you guys on Monday. Oops, I broke it all. Okay, perfect. Bye.